Over the past couple of videos, I've tried to explain in an unbiased manner how the on-chain data is painting a picture in Bitcoin, right? So we've noted that long-term holders are trading their coins at higher prices to more short-term market participants. And we've seen a rotation at these higher prices, and we've continued to see this dynamic play out during the current market dip. I've expressed my own bias of continued higher prices, specifically for Bitcoin, despite these outflows, despite these dynamics. Before we get into the video, I want to mention that, we've seen market manipulation within certain exchanges today and in prior times in history. Manipulation and insider trading in anticipation of these political events has happened, and it will probably continue to happen. I don't think anyone should be surprised about that. I've really tried not to cover any altcoins in this channel, and in one of my previous videos, I mentioned that my positions are currently 70% Bitcoin and 30% Ethereum, and the reason for this is because of how deep we can see these sort of corrections in altcoins. The risk to reward ratio is not favorable for altcoins, mainly because they bleed against Bitcoin over a long enough time horizon. Bitcoin only pulled back about 15% and then had a subsequent retrace up to 6%, only 6% down, whilst a number of major altcoins dropped much lower than that. So let's dive into what the on-chain data is telling us right now and how you can be better prepared for what's to come. So we've seen a dip below the short-term holder cost basis at around 114K. We've seen that previously dropping below this level has marked levels of consolidation events, style consolidation events. When we break below it overall this cycle, currently we've seen support at the all-time average MVRV, which is basically the overall profit in the system that we can see on chain. So typically when we see traders break even on their Bitcoin positions on chain, we've bounced from this level this cycle. And this is typical during previous bull market structures, in my opinion. And I think we'll hold above these two price levels as we go out further into Q4. That's just my opinion. I could be wrong about that, but I'm putting my money where my mouth is. And from a seasonal perspective, October has typically remained very positive. And keep in mind, most of these returns actually occur in the latter half of October, with an average return of about 25.7%. And we see a similar situation while looking at Ethereum, positive during prior Q4s as well. So the question is, was this a flush before that the famed Q4 rally, or is this the beginning of something worse? So some metrics to look at in order to back this up is simply looking at realized profit and losses on chain. So historically, when we see losses start to spike heavily, it can result in these market turning points, right? So looking at this chart, the long-term holder realized profit to loss ratio, we can see that when we hit these negative readings in the metric, we've seen during accumulation events, during consolidation events before the famed Q4 market cycle top in the post-halving year, we've seen this play out during 2013 bull market, where we saw negative realized losses for long-term holders. We saw this during 2017. We didn't really get below into negative territories, but we still saw some dips in this metric. And then in 2021 during summer, we saw this play out as well. And we've seen similar scenarios this cycle as well during the dip from 72 to around 58 here, and from 100 to around 80. And so during this dip, we haven't really seen these extreme losses for long-term holders yet as of October 11th. If we start to see major losses in this metric during early 2026, that could mark the cycle top if it hypothetically by that time, right? So in the last couple of videos, I've been providing an update on this metric, and during the peak to 125K, we did note that this level had reached historically high levels. And this is one that's definitely something to watch, right? So if Bitcoin sees continued sell pressure, you'd start to see this metric go negative. If that happens, I personally think we'd see a bounce immediately off of it, just like we've seen in these prior two consolidations, at least until Q4 gives us that confirmation. So another metric we've been following for quite some time is the short-term holder versus long-term holder supply, right? We've seen that long-term holder supply goes down and short-term holder supply goes up when long-term holders start to realize profits and distribute coins to participants that come in at these higher prices. Some people can capitulate, some leave, some stick around. These are the long-term holders that we refer to, right? So if anyone holding Bitcoin over 155 days onward, right? So for example, I bought during the FTX 2022 crash. I also bought some during the 2021 summer crash, and I also bought during the end of the bull market in 2021, even though it was a little bit higher than I wanted. But so my point is, most of my coins haven't moved, and so those would be in that 155-day threshold on chain. So again, if these long-term holders will hold coins even throughout these drawn-out bear markets and accumulate whilst the bear market is occurring, and then distribute during the bull market phases, and then accumulate again, distribute again. This dynamic plays out again and again, right? So long-term holders distribute to short-term holders at higher prices. Short-term holders capitulate during consolidation events. Long-term holders reaccumulate these coins at higher prices. This basically raises the supply held by long-term holders over time. So we've seen it occur, that we've seen this value go up, their supply over time, compared to short-term holders, which has relatively remained stagnant, right? So as some people would like to call them, smart money, right? And if we take a look at the long-term holder net position change, this is the absolute number of Bitcoin supply being held by these long-term holders. In red, we see distributions, and in green, we see accumulations. So right now, we're still seeing an average overall distribution in red. But we've seen that this can quickly turn around right before major market moves. And for example, we saw major distributions into the run-up of around 72K, but we also saw exceptional amounts of accumulation during the summer dip. We saw the exact same scenario in the run-up to 100K for the first time, right? And the major accumulation events as we consolidated back. Now, I want to discuss another metric on the website called the adjusted SOPR. This looks at basically profit-taking behavior on chain, but it's filtering the Bitcoin that moved within 1 hour of it initially being spent or sent to another wallet. So we're excluding very short-term movements and focusing on real holder behavior. So we can see that most realized profits typically occur during market cycle peaks, right? And most losses occur during market cycle bottoms or the beginning of phase shifts into bear markets. We haven't yet seen major losses occur thus far in this dip. But if we start to get below these important average market cost bases, such as the MVRV level at 100K, then this metric would start to see some sustained losses. In my opinion, right now, I don't think that we're going to see these major losses. I think that conviction is still strong, that even at current prices, people aren't panic selling Bitcoin at a loss. But this can change pretty drastically if we start to see major capitulation style events. But I personally don't think that we'll be seeing these until the latter half of Q4 or the beginning of 2026. And as a side note, we're also still seeing continued positive ETF inflows, even during the crash. Traditional finance, retail institution, whatever you want to call them, are still purchasing Bitcoin. So Bitcoin's crashed from 15% from 126 to around 105K. Altcoins pretty much got demolished, and we broke below the short-term holder cost basis at 114K. We found support at the 105K region. Obviously, this is not on an intraday level, but on an intraday level, we found support at that level, and we've seen a small bounce back up. The supply rotation from short-term holders to long-term holders is still occurring, right? And we haven't seen any major losses being locked in on chain just yet. Most Bitcoin is still being moved at a profit, except short-term holders, which are at a loss, being below the short-term holder cost basis. And so, in my opinion, this looks like the start of a consolidation event, not the start of a bear market. We're still holding these critical support levels that I've talked about, and historically, October has delivered strong returns in the second half of the month. unless we start to see some unprecedented weekly closes below 100K, the MVRV average, and can't hold above it, I still think Q4 will remain positive just like it has in prior post-halving years. And as a side note, it's also important, in my opinion, to look at these time-based metrics. So you could argue that from a bottom to peak ROI view type. So this is looking at the amount of time that Bitcoin has spent from bottom to top. And so currently we're at a day 1,056, and prior peaks have occurred historically from 1,068 to 1,061 days, excluding the early cycles, which only lasted about 326 and 747 days respectively. And so this is something to look at. And this is a reminder that, everything that we've seen over the past couple of days is a reminder that Bitcoin is still volatile. It's always been volatile. Corrections happen, crashes happen. If you're overexposed or you're using leverage, these events, they're guaranteed to wreck you, right? Stay strong, avoid using leverage, sticking mostly to Bitcoin and other hard assets is probably the best thing to do, right? Altcoins can rally, but a majority of them are high risk trades. And from a risk adjusted return perspective, Bitcoin's going to outperform 99% of everything else. And so quickly want to talk about the risk levels, because I haven't yet in any of my videos, except in early ones. The risk levels for some altcoins in the top 10 are high and have been for quite some time now, while others might be low, but have been historically underperforming Bitcoin on a relative basis, right? On an actual BTC denominated basis, they've been underperforming. For example, XRP and Solana have been relatively high this cycle. So if we look at Solana, it's been pretty high this entire cycle. Ethereum versus Bitcoin is interesting because it's pulled back a little bit here, which is a similar level that it pulled back to in 2021 from about 0.04 to about 0.03, which in my opinion is a healthy pullback to see it. I think you'll see Ethereum outperform Bitcoin after Bitcoin starts to take back more market share from alts. Then I think Ethereum will start to rally near the middle to end of Q4. So all these on-chain charts are free on chartinspect.com. If you're interested, you can track these markets for yourself in real time, and you can check out some of the pro charts if you're interested. If this analysis helped you, subscribe for more on-chain updates and let me know what you think in the comments below. Thanks for watching, and I'll see you in the next one. Bye.